In this module, we shall study about human resource accounting. Accounting is a language of business. Originally, accounting was developed as a reporting system. So obviously, it had to be historical as also factual. However, later on, the management of business and other stakeholders wanted it to contribute to management decision process. Naturally, that would call for a forward-looking approach, and in that case, it will have to work with forecast. When everything is opening out, being subjected to market forces, market value based accounting, that is valuation of human resource, should also be considered. Different authors define the term human resource accounting HRA differently. Brumet et al. 1968, which worked for the first time under this term on measurement of the human values in an enterprise in the year 1968, defined human resource accounting as: human resource accounting is the process of identifying, measuring and communicating information about human resources to facilitate effective management within an organization. Woodruff Jr. defined HRA as the identification, accumulation and dissemination of information about human resources in dollar terms. The American Accounting Association Committee 1973 on HRA defined human resource accounting as follows. HRA is the process of identifying and measuring data about human resources and communicating this information to interested parties. This definition suggests that HR accounting is a tool that can be used for reporting people as organizational resources in both financial and managerial accounting terms. Flamholtz defined HRA as the measurement and reporting of the cost and value of people in organizational resources. Stephen Knopf defined HRA as the measurement and quantification of human organizational inputs such as recruiting, training, experience and commitment. After studying this module, one shall be able to define human resource accounting, understand the objectives of human resource accounting, interpret the major issues in the field of human resource accounting, have an overview of different measurement models of human resource accounting, understand the present scenario of human resource accounting in India. We shall now understand the objective of human resource accounting. Human resource accounting has an objective to assist internal and external users by providing information about the cost and value of human resources. In fact, as outlined by Flamholtz, HRA had three main roles: to provide organizations with objective information about the cost and value of human resources, to provide a framework to guide human resource decision making, and to motivate decision makers to adopt a human resource perspective. Likert, one of the earliest proponents of the subject, has listed the following objectives of human resource accounting: to furnish cost value information for making management decisions about acquiring, allocating, developing and maintaining human resources in order to attain cost-effective organizational objectives; to allow management personnel to monitor effectively the use of human resources; to provide a sound and effective basis of asset control, that is, whether assets are conserved, depleted or appreciated; to aid in the development of management principles by classing the financial consequences of various practices. Now, moving on to the major issues of human resource accounting. The following are the major issues which should be considered for implementation of HR accounting. They are as follows. First, The traditional accounting procedures which have been practiced since long have come to stay as acceptable norms. As a result, whenever a new accounting system is developed, it is pitted against the strengths of the traditional system, which is considered to be comparatively objective and free from any bias. Similarly, in the case of human asset measurement also, it is argued that it lacks symmetry with traditional resource. Therefore, it cannot be included within the traditional definition of an asset, that of a human. Second, there is little agreement concerning the procedure in human resource accounting. There are proponents and critics of the various approaches like cost and value approaches. This factor has become responsible for the slow development of the concept of human resource accounting. Third, the historical cost approach to develop measures of HRA uses an amortization rate, which provides the figure of amortization to be charged to the profit and loss account every year. But it is very difficult to develop norms in this regard. Physically and mentally, individuals grow and deteriorate at different rates. Some grow more capable as a result of their work experience, others do not. Given the difficulty of predicting such changes, it is even more difficult to develop a means of writing off an individual's value. So far, precise measures for amortization of human assets have not been developed. Fourth, another issue which has not been settled so far is about the rate at which the prospective stream of contribution is to be discounted or compounded to calculate its present and future value to the organization. A number of applications are available in this process. Fifth, if an individual is to be valued normatively, the model given by Flamholz 1973 expects that the career path of individuals should be plotted over the span of his probable stay with the organization in the light of the current promotion and retirement policies of the organization. But such exercise is tedious. Sixth, it is possible that apprehension regarding the effect of human resource accounting on human behavior may have forced the organization to be reluctant to use the system. It may lead to alienation as the people might feel that they have been reduced to as industrial input commodity. Publicizing of human asset data could have disastrous effect on the attitudes of employees. Seventh, the physical assets can be owned and traded by an organization, but the human assets cannot and can be only utilized in this regard. The physical assets have some realizable value of retirement, but the human resources do not have any such value. They may involve payments of retrenchment, compensation, gratuity and other benefits. Human resources is an appreciating asset since manpower improves with time, with due regard to their aging constraint, but for physical asset, its increasing value at the time of its installation starts immediately depreciating. We shall now discuss about the human resource accounting models. A person has a set of competencies and a value is assigned to each of these competencies. The sum total of it is the value of an employee and the sum total of the value of all employees is the human capital of the organization. A skill has a value so long as it can fetch a return. Once it has determined that there is value, there is a need to establish its quantification. Next, monetary models. Monetary models deals with monetary aspects that are involved in human asset. These monetary aspects can be cost-based or value-based models. Cost-based models. The cost-based approach focuses on the cost parameters, which includes historical cost, replacement cost or opportunity cost. These models include the parameters like spending, payoffs and expenses. These costs can be actually resulted or calculated. Likewise, the cost can be incurred in the past or prognosticated for the future. The various cost-based models as shown in figure are as follows. As you can see in the diagram, cost-based models, then you have the following cost-based models: historical cost method, replacement cost model, opportunity cost method, standard cost method, current purchasing power method, total cost concept model, Bardya's cost-based model, human resource total replacement cost method, Rao's input-output control mechanism model, Bukhari's human capital valuation method. Next, value-based models. The value-based approach suggests that the value of human resources depends upon their capacity to generate revenue. The various value-based models are as follows: Hermessen's model, Lev and Schwarzer's present value of future earnings model, Flamball's stochastic rewards valuation model, Chakrabarty's human resource valuation model, Friedman's and Lev's human resource valuation model, Robinson's human asset multiplier method, Brummett et al. Economic value method of group valuation, Jaggi and Lau's human resource valuation model, organ certainty equivalent net benefits method, Morse's net benefit method, modified Lev and Schwartz model, differential weighted average replacement cost model, French-Reb economic value model, Danek's market value based model of HRA, Kodwani and Tiwari's accounting model for human valuation, Watson's return of effort employed model, and lastly Dave's modified present value model. Non-monetary models are basically behavioral models that take into consideration various behavioral aspects relating to human asset of an organization such as attitude, behavior, motivation, perception, performance, leadership style, etc. to judge the performance of the organization. The various non-monetary models are as follows: Likkert's causal, intervening and end result variables model, Mayer's and Flower's behavioral model, Flamball's behavioral, social and psychological model. Next, contribution based model. The value of each individual working in an organization is based on the contributions made by that person to the organization, for which organization incurs certain cost. Contribution based models as follows: Singh's human resource valuation model, Singh's and Rastogi's model for human transformation, Gowda's asset valuation model. All these models, apart from providing a different approach, provides a different mechanism for computing the value of an employee to the organization, being based on different theoretical foundations adapted by researchers from different disciplines. Let us discuss the present scenario of human resource accounting in India. In India, human resource valuation until now has not been introduced as a system in most of the companies. So far as the statutory requirement is concerned, the Companies Act 2013 requires the furnishing of little information about human resources in the annual reports of the companies. Section 134 and Section 178 of the Companies Act 2013 requires the companies to give the particulars of some employees drawing salaries above a specified limit in the annual reports of the companies. Also, though the Accounting Standard Board ASP of the Institute of Chartered Accountants of India ICAI has issued accounting standards on most of the important areas in accounting and has ensured their implementation by making accounting standard mandatory. The most regrettable fact is that it has not issued any accounting standard for the measurement and reporting of the cost and value of human resources of an organization and the contribution made by them. Due to this fact, a very large number of organizations are following even today the principles and practices of conventional accounting. But still, there are some of the companies in India in private and public sector that recognize the importance of human resource accounting and started incorporating the value of human beings as unaudited supplementary information in their published annual accounts like Cement Corporation of India Limited, Hindustan Petroleum Corporation Limited, Infosys Technologies Limited and Rolta India Limited. Let us now recapitulate what we have learned so far. Human resource accounting is still in its infancy in India because it has not been introduced as a system. This is a paradox considering the abundant existing and potentially available human resource accounting measures including cost, process efficiency, activity levels, resource ratios and customer or client ratings. Yet, these have not produced a widely accepted measurement system for human asset. Also, the varying requirements in different countries and of different branches seem to prohibit a unique model of human resource accounting. Therefore, there is a need to fix the goals of the measurement first and then decide about the concept to start the evaluation. Thank you.